Hey friends! Today, we are not going to waste any time on empty talk. Today, we are breaking down an asset that, right at this very minute, is making short sellers bite their elbows, while long-term holders can finally breathe a sigh of relief. A coin that has been declared dead hundreds of times, labeled a banker's scam and a stablecoin, is right now breaking out of the charts and waking up from a long hibernation. Yes, you already guessed it from the thumbnail. We are talking about Ripple and its ultimate trump card XRP. Let's synchronize our watches. The calendar shows mid-March 2026. If you open TradingView or CoinMarketCap right now, you will see a massive green candle that just smashed through major resistance. Right as I am recording this video, XRP is trading at $1.54, 1.54, and the trading volumes are only accelerating. We have officially started the uptrend. Many of you remember that crazy euphoria of July 2025, when XRP flew to 3.66. Back then, every crypto influencer was screaming about $10 tomorrow. And what happened next? We got a brutal, exhausting 60% crash. Months of pain, where the price slowly but surely bled down to the 1.38 to 1.45 range. The crowd capitulated. On betting platforms like Polymarket, the odds of XRP just getting back to $2 were priced at a pathetic 5%. Retail investors were locking in their losses, cursing Brad Garlinghouse and the entire Ripple team. But while the average retail guy was panic selling his XRP at the absolute bottom for $1.40, someone very big was quietly placing bottomless buy orders. And what we are seeing right now, this explosive push to 1.54, is not some random pump. These are the first signs of the spring uncoiling. The smart money is already here. Today, I'm going to show you facts and on-chain data that will give you goosebumps. I will prove to you that the current price isn't anywhere near the ceiling. It is just the launch pad. Brew some strong coffee, get comfortable, and let's decode the matrix. Let's start with the fundamental driver that major crypto bloggers are somehow staying completely silent about. In November 2025, a historic event took place. Spot XRP ETFs officially launched in the US. Giants like Bitwise, Franklin Templeton, Grayscale, and 21 Shares brought their funds straight to Wall Street. And you know what the most mind-blowing part is? While the crowd was screaming that the coin was dead and the chart was bleeding out from $3, money was flowing non-stop into these very ETFs. By mid-March 2026, the total capital inflow into spot XRP ETFs reached an insane figure: $1,440 million. $1.5 billion. In a falling market, do you seriously think institutional investors are throwing around those kinds of numbers for no reason? Do you think they don't know how to calculate risk? Just recently, the SEC published the 13F forms. For the beginners out there, a 13F is a mandatory quarterly report where funds managing over $100 million have to disclose their positions. And this release was an absolute bombshell. Goldman Sachs, one of the most powerful and conservative investment banks on the planet, officially emerged as the largest holder of XRP ETFs. Quietly, with no press releases, they scooped up $153.8 million worth of shares. And they did it in the smartest way possible. They spread the capital across 4 different funds to avoid drawing attention and to diversify provider risks. The top 30 institutional investors now collectively hold over $211 million in XRP ETFs, and the lion's share belongs to Goldman Sachs. When you were looking at the price at 1.4 thinking, "It's a scam, I'm selling," Goldman Sachs analysts were hitting the buy button. They bought your fear, and now that their bags are packed, we are seeing the chart react. The 1.54 level we are breaking today is the direct result of cheap liquidity drying up on the OTC markets. Whales are starting to sweep the order books on public exchanges, pushing the price higher. But why did Wall Street choose XRP in the first place, and not some hyped meme coin or a new layer 2 blockchain? The answer lies in the law. And this is something the market is only just beginning to price in. Let's rewind. December 2020. the SEC files a $1.3 billion lawsuit against Ripple Labs. Exchanges delist the token, panic ensues, and XRP completely misses the 2021 bull run. In 2023, Judge Annalisa Torres ruled that exchange sales were not securities, but the sword of Damocles, the threat of appeals, still hung over the project. Finally, in August 2025, this 5-year nightmare officially ended. Both sides withdrew their appeals. Ripple paid a $50 million fine, which is absolute pocket change for a company of that scale. The court put a hard, final stop to the case. Guys, think about this. Today, XRP is the only altcoin in the United States that has 100% ironclad, court-confirmed legal clarity. It is not a security. Period. Not Solana, not Cardano, not even Ethereum has this kind of crystal clear legal status. That is exactly why Tier 1 banks like Goldman Sachs aren't afraid to buy its ETFs. That is why traditional financial institutions can legally integrate the XRP ledger into their internal settlement systems. The regulatory risk that choked the price for 5 years has been reduced to zero, and the breakout to 1.54 is just the first reaction of big capital to this new, fully legal reality. Now, let's move on to the hottest topic, the one that's been causing actual wars in the comment sections. I'm talking about RLUSD Ripple's very own US dollar-pegged stablecoin. Ripple launched it in late 2024, and by March 2026, its market cap skyrocketed past $1.56 billion. It processes over 500,000 transactions every 30 days, with volumes hitting 3.5 billion. And this is where the XRP holder camp split in half. The panic sellers started screaming, "Why would banks need volatile XRP if there is a stable digital dollar from Ripple itself? We've been betrayed. The token is useless now." Guys, you are looking at the situation in a completely one-dimensional way. Let me explain how the architecture of Ripple payments actually works. Banks genuinely hate volatility. No sane bank wants to hold volatile crypto on its balance sheet for daily settlements. Therefore, Ripple uses the RLUSD stablecoin as a hook. As a Trojan horse, they go to major players, for instance, LMAX Group, an institutional exchange that handles $8 trillion in volume, and they say, "Here is a legal, transparent stablecoin, RLUSD, use it." And the institutions start using it. But what happens when a bank in New York needs to transfer money to a partner in Japan? The Japanese don't need the dollar-pegged RLUSD. They need yen. And this is exactly where XRP steps in. The XRP ledger is essentially a giant decentralized exchange. When there are multiple stablecoins on the network like the US dollar RLUSD, the European EURCV, and so on, they need a universal bridge for instant conversion. XRP acts as that bridge asset. The algorithm takes RLUSD, buys XRP with it in a fraction of a second, moves it to Japan, and in another fraction of a second, sells the XRP for digital yen. The entire transaction takes 3 seconds. There is absolutely zero volatility risk for the bank because the XRP is only in flight for a couple of seconds. The higher the market cap of RLUSD, the more liquidity gets pushed through the automated market maker pools on the XRP ledger. And to operate these pools and pay for network gas, you need, guess what? Exactly XRP. Every single transaction burns a microscopic fraction of XRP, constantly reducing its supply. RLUSD is not killing XRP. It is creating a fundamental demand for it that we have never seen before. Price charts can be deceiving. Market makers can paint any candle they want to hunt your stop losses. But the blockchain does not lie. Let's look at the on-chain data for the past couple of weeks. By mid-March, the XRP ledger hit insane metrics. 3 million transactions per day. This is pure, organic growth. The DeFi sector on XRPL now has over 27 zero-active AMM liquidity pools deployed. But the real shocker dropped on March 20, 2026. The Ripple Prime platform, formerly the institutional venue Hidden Road, which Ripple acquired, officially joined the DTCC clearing directory. For those not deep into Wall Street mechanics, Let me explain in simple terms. The DTCC, or Depository Trust Clearing Corporation, is the absolute lifeblood of the entire U.S. financial system. It is the corporation that handles the clearing and settlement of securities worth quadrillions of dollars. And now, Ripple Prime has a direct bridge right into it. Just put the puzzle pieces together. 1. Goldman Sachs is buying the ETF. 2. The lawsuit is over. The token is fully legal. 3. The institutional stablecoin is live and generating massive volume. 4. Ripple connects to the DTCC. And after all this, are you still surprised why we broke 1.54 today and keep going up? The fundamentals have completely shattered the technical resistance. The 60% price squeeze was an artificial suppression, designed to let major players build their positions before full integration with traditional finance. Now let's look at the chart, because the technicals right now look absolutely phenomenal. Historically, XRP is an asset that loves to test investors' psychological limits. Every single time before a massive parabolic rally, and we saw this in 2017 and 2021, XRP painted the exact same pattern. A massive impulse, followed by an agonizing 60 to 65% drop, consolidation at the absolute bottom forming a cup and handle or a bullish wedge, and then an explosion. The drop from 3.66 to the local bottom of 1.38 perfectly aligned with a 62% Fibonacci retracement. That is the golden pocket, the exact zone where smart money always buys the dip. So what are we seeing right now? First, we bounced perfectly off the 100-day exponential moving average, which acted as an ironclad support level at 1.4. Second, on the daily time frame, we formed a massive bullish engulfing candle. We smashed through the local resistance at 1.5 that had been torturing us for weeks, and we have now established a foothold at 1.54. This breakout is backed by a massive surge in trading volume up 45% over the last 24 hours. The relative strength index has exited the oversold zone and is pointing firmly upwards, sitting around the 55 to 60 mark. This means we have plenty of runway left before we even get close to being overbought. The bearish trend is officially broken. We have transitioned into the accumulation phase right before the next impulse wave. Technically, the next stop is the 1.85 to 2 zone, where massive pools of short seller liquidity are sitting. And once we trigger those stop losses, the fuel from those liquidations will send us even higher. So, the bottom is in. The growth has started. What is going to accelerate this price action through the rest of 2026? First, macroeconomics. In May, we are expecting leadership changes at the U.S. Federal Reserve. Policy is expected to become more dovish. Interest rates will likely continue to drop, and liquidity will flood back into risk assets. Crypto thrives when the dollar gets cheaper. Second, the Clarity Act. This bill is currently being heavily lobbied in Congress. If passed, it will permanently solidify the rules of the game for stablecoins and utility tokens in the U.S. For Ripple, this means an undisputed green light to work with absolutely every single bank in America without restrictions. Third, altcoin season. Bitcoin has been sucking up market liquidity for a long time, building its dominance. But historically, as soon as Bitcoin stabilizes at new all-time highs, capital violently rotates into large-cap altcoins. And XRP, being one of the highest cap and legally clearest assets on the market, is going to take a giant slice of that pie. So, where are we flying to? Let's look at the real numbers. The conservative scenario from analysts at places like Standard Chartered and institutional quants puts the first major target for late 2026 in the 2.8 to 3.5 range. That is basically a return to and a retest of the previous local highs. The base case scenario, which factors in the current network volume growth, the aggressive use of RLUSD, and ETF inflows, breaks past those previous highs and takes us into the 4.5 to 5 zone. At the current supply A 5 price tag gives XRP a market cap of around $280 billion. Given that there are already trillions of dollars circulating in crypto, this is a completely reasonable, mathematically achievable valuation for an asset integrated into the global banking system. But then there is the super cycle, a scenario where the DTCC integration and global liquidity align perfectly. In that case, many top-tier Western analysts are not ruling out an aggressive wick into the 10-8 to 10 zone at the absolute peak of the alt season, strictly for major players to take their profits. Let's wrap this up, friends. Today we are looking at 1.54 on the chart. To some, that feels too expensive to buy, and to others, too cheap to celebrate. But investing is a game for people with a cold, calculated mindset. You have to realize that what happened over the last 6 months was a classic textbook manipulation to shake weak hands out of the market. They made you believe XRP was a thing of the past. Meanwhile, Goldman Sachs and ETF providers were loading up their balance sheets with hundreds of millions of dollars. Fundamentally, the network has never been stronger. 3 million transactions a day. Partnerships worth trillions of dollars. Absolute legal clarity. DTCC clearing integration. And right now, we are seeing the confirmation on the chart, breaking resistances, surging volumes, and a confident reversal upward. The growth we are witnessing right now is not a coincidence. It is an inevitability. If you sat through the drawdown, well done. You didn't give up. If you bought the recent dip, congratulations. You are already well in the green. The most important thing right now is not to succumb to emotions, avoid jumping into crazy leverage, hoping for instant multipliers, and strictly follow your strategy. Drop a comment below. Did you manage to buy the bottom at 1.4? At what price are you planning to take your first profits? Make sure to share your thoughts. I read every single comment. If you found this deep dive valuable, smash that like button right now. It's the best way to say thank you, and it massively helps the YouTube algorithm. Subscribe to the channel, and make sure to hit the notification bell so you don't miss our urgent market updates. Hold the line, manage your risks, and remember, the biggest fortunes are made by those who see the entire picture, while everyone else is just staring at the 1-minute chart. Thanks for tuning in. I'll see you in the next video. Stay profitable and keep your P&L green. Bye.